Alright, good morning. Hopefully my mic is close enough. Can't wait for my new desk and my new mic. But let's cycle through the time frames and start with the dollar index. So dollar index monthly. I'm gonna go through everything today and wrap it up in the first hour of the market open. So by 10:30 you should be done. So monthly, note the highs, the previous month high and previous month low. That's the range that we're operating in. That's the range that we've been operating since the New Year's, so since January 2nd. My draw on the monthly candle is that volume imbalance, the separation between the November close and the December open. So that's what I'm looking for. How we trade here at these two levels will determine this previous month high. Whether we trade there or not, we do have this undelivered sell side imbalance, buy side inefficiency above the marketplace. So that's long-term draw, and I'm talking like long-term. So it's not gonna pan out immediately by tomorrow or even next week or even next month. So it takes a lot of time for a level like this to unfold on the monthly. To the weekly, we have that range right here. So this is a clear dealing range that we're operating in right now. We've traded to the, I'm sorry about my laptop, we've traded to the 0.25 gradient of that dealing range, and we've showed a willingness to want to trade higher. Last week I mentioned this 1 week fair value gap / SIBI formed during the week of December 11th to December 15th, and of course my laptop is going crazy right now. It was quiet the entire morning. Anyways, Sunday open right here, so that is the Sunday 6 p.m. open of this week, and so anything below that is used as a means of accumulation, and anything above that is premium, so that'll be used as offset distribution. I'd like to see this 1 week fair value gap SIBI used as inversion, so once we trade above it, I want to see how it's used as a discount, right, this low, to take it up into this high and potentially book this previous week high by the end of this week. We have CPI tomorrow and PPI on Friday, so that can be used as rocket fuel to take it up into the previous week's high. That's my best terminus, or my just terminus for the week. So anything above previous week high and I'm done. If it happens today, that means I'm done. I'm not gonna place too much emphasis on Thursday and Friday. Obviously I'll tape read it, that's a given, but you can see those monthly levels transposed down to the weekly chart, and now you'll see this weekly level transposed down to the daily chart. And note this equilibrium and this 0.25 gradient, and how we're basically in the middle right now, which leaves a good sort of equilibrium inside of these two levels. So also another thing, this sell side here, right now we're below it. Just because we went below it and closed below it and been below it for 3 or 4 weeks does not mean that, you know, you just remove this. It is at the imbalance right here. So I'd like to see it. Well, first let me backtrack. On this candle, you see how we reached up into that and used it as a premium to kind of close a little lower. Because of my monthly draw, I'd expect for anything below this sell side to be used as a discount. And then you add in this 6 p.m. Sunday open, and you see how the weekly candle is kind of forming, and anything below this is used as discount. So daily, Alright, so let me just pull up my notes here so that I can use those for reference, because I have actually written something for the dollar daily. So so we have sell side below here. We're still trading inside of Friday's range. Wow, my laptop, man. Anyways, we are still trading inside of Friday's range. So two possible scenarios I see is digging down into the sell side. Well, actually, let me change that because that was at the beginning of the week. So right now, at the current time of 9:06 a.m. New York local time, looking at this candle and looking at Monday and Tuesday's delivery, we are inside the equilibrium, not of this higher time frame weekly dealing range, but inside the monthly range. So you can see from here to here, we're sitting right at equilibrium. We've consolidated, so it's either we go up or it's either we go down. And we have this January 2nd fair value gap BISI over here. Give me 1 second. I'm gonna move my mic away from my laptop because that is so frustrating. Okay, hopefully it's a little better. So like I said, the January 2nd fair value gap. So one thing I'd like to see in Confluence, if we're delivering higher prices up into this previous week high and into the sell side first, is this December 21st inversion fair value gap, or technically a SIBI, but I'd like to see it treated as inversion, and I don't want to see this low delivered. So that would be 101.895. So if we're to deliver into this previous week high, I'm using this as kind of like an anchor point into something I don't want to see traded into. So that does leave the option for this sell side to be swept, which I don't think it will be now. I think it's just gonna go up into the previous week's high, specifically because of this buy side pool here and how we've consolidated around the equilibrium. To me, I don't think it's really too likely for it to go down into the sell side and then trade up into previous week high, just because of time elements. It is Wednesday. We only have 2 days left till the close, and 3 including today, but let's see what happens. Let me make sure I'm not missing anything. Alright, 60-minute, just a quick overview, and then I'll come down to lower time frames later. So you can see Monday, Tuesday, Wednesday, Thursday, and Friday, we have these new day opening gaps right here. Sunday open, you can see we've worked below that, right? We've created a new day opening gap, we've worked inside of it, and now we're above it. I think it was 5 a.m. that I woke up, so around the 6 a.m. candle, we were below the Tuesday to Wednesday new day opening gap, and I'd like to see this used as inversion, meaning it goes above it and uses it as support. You can see we've done that. We came, closed, opened, came below. What is this? This gradient line over here, you might not know, but it's the equilibrium of the weekly range. And so came, touched it, mohawk, and we closed right above the consequent encroachment. Right now we're working on this candle, which is below the buy side, so I still expect room to the upside. There's this rejection block here, so that is 102.591. So I'd like to see 102.591 traded to by the morning session at least, which, now that we've cycled from the monthly down to the 60-minute, that gives us a risk off market condition. So that means dollar higher and indices lower, or weakness. So if you know, well, actually, I'm just gonna leave that thought. So let me drag this here. All right. S&P monthly, still inside that. Let me remove that. That's bothering me. Still inside the monthly range. I don't think that we're gonna expand into the previous month's high anytime this week. I can't say for next week, but that does leave me just, having that belief or having that analysis. It leaves me a lot of room to negate any bullish ideas, especially because dollar is risk off. Weekly, this is the previous week low and previous week high. I'll zoom in a little bit. So obviously we had this December 11th to 15th fair value gap BISI, and we did react off of that quite well using these levels like the monthly rejection block and the monthly buy side and this monthly buy side. So right now, first thing my eye picks up on is this was used as discount and this was used as premium. We've worked above the buy side, so it need not to come back up above here, at least the previous month high, and attack buy side. In my opinion, they can attack this previous week high, and it is possible, but right now, just looking at dollar, and we have high impact news tomorrow, and in my opinion, people see this candle, something like this, from 47.36 to current market price 47.91, and they believe that we're bullish, especially after we've had 1, 2, 3, 4, 5, 6, 7, 8, 9 up close weeks, and we've had 1 down close week. So this gives off kind of like an illusion in my head that we've delivered 9 weeks up, we've delivered 1 week down, and now we have this up close candle that looks like it can go higher. It looks like it could close here and it could be counted as an up close candle. I mean, that's pretty nice for a weekly range, but I think we're gonna trade lower, especially because we've immediately rebalanced this high right here. So note that December 26th weekly candle low, okay? And remember that. Oops. Okay, daily. So if we're bearish on the monthly and we're bearish on the weekly, we can cycle down to the lower time frame and find some discount objectives that could be met for the remainder of the week. So we have this nice premium array right here. I like how we're trading at that level using this buy side liquidity, and my first discount objective is this fair value gap, the Monday, January 8th bullish fair value gap, or plus FVG. Note the monthly gradients, or the monthly dealing range, and the gradients inside of them: 0.25, 0.5, 0.75. If we're working in a premium right now and the algorithm is likely to seek discount, it's going to seek it below 47.81. So that's kind of your first target. And then your second target would be the consequent encroachment of this wick. Let me measure that and see if it's below. So yeah, right below it. So if you want to be that precise, you can. But if you're not using that, your second target can be this previous day low, which would be the high of this fair value gap. So note the high of Tuesday, and then the high of today currently. It's the exact same, 48.04. So right over here, 48.04 is the high, 48.04 is the high. NASDAQ, oh wait. Sorry. Okay. So, just real quick, that daily January 2nd fair value gap SIBI transposed to the hourly. I like that. This is the new day opening gap, and this is also the new day opening gap. This is from Monday into Tuesday, and this is Tuesday into Wednesday. So you can see we're kind of working inside of that range. We have been for a couple hourly candles. Not perfect, but it doesn't have to be. It just kind of looks like it, I guess. Even though we've closed above it, we came back down and then we closed below here, and now we're coming back up. So let's see what happens at the 9:30 open. And we do have some sell side below here and below here that can be attacked should we draw lower. And obviously we do have equal highs here, right? Pretty equal. So, but I don't think that these will be attacked. And if they are, I'm wrong. And that's okay. NASDAQ. Same thing, working inside that monthly range. There's that Sunday open. So it's likely that that monthly candle can draw down into, not exactly, but it's just like a magnet. It doesn't have to go there. It just has to, I guess, draw there. So weekly, note that monthly range, that monthly dealing range that we're working inside. We've already referenced the 0.75 gradient of that monthly dealing range. You can see that same December 11th, 15th fair value gap BISI was utilized, but it dug in much deeper into that. It didn't touch the low, but it dug in much deeper than it did on the S&P, and now we're above this high. So for me, I'm looking at this as sort of like a, not a true day open, but the same function as a true day open, meaning above that is premium and below that is discount. So because we've referenced this, and like I said, note that December 26th weekly candle low. The reason I say that is because look at the gap that is left right now. So assuming that this is the high, like right now at this time, assuming that that is the high, then looking into the future, I mean, basically that's what we're doing. Looking into the future, can you imagine that S&P went up into that low and then the NASDAQ did not, leaving a gap? I don't really know how to word it better, but basically S&P went and touched that low and NASDAQ did not. So it's leaving a gap here that can be later referenced in the future. The daily candle, or sorry, the daily chart. That same January 2nd fair value gap SIBI, much larger, right? It was pretty small on S&P, and right now we are above, sorry, not above, but we went above the consequent encroachment of that, which is 16,837 3/4. So right now we're at 16,832 1/4. And so that consequent encroachment perfectly lines up with the 0.7 gradient of that monthly dealing range. And note Tuesday's high, and you're gonna have to do this on your own. Note Tuesday's high on NASDAQ and note Tuesday's high on S&P, and look at the next day's candle, which is today, we've actually went above the previous day high inside a premium array where we're already expecting a draw lower, and dollar is currently risk off, or we're anticipating it to be risk off. So yep. And also this is the same fair value gap that was used on the daily chart on S&P, so that's my an objective for NASDAQ. Here's the 60-minute. Monday, Tuesday, Wednesday, Friday. Friday's close. Those equal highs that were left on S&P, if you take a look at NASDAQ, it's went 3 drives higher basically. So 1, 2, 3, and we are above, like, well, let me reword that. If you remember, which was like 5 minutes ago, I mentioned the Monday to Tuesday new day opening gap and the Tuesday to Wednesday, and you saw that we were kind of in the middle. It was like in the middle of that, just like wandering and jumping in and out. On NASDAQ, it's a little different. We've basically built up quite a heavy premium. So the reason I say that is because, well, if you look at these 3 drives higher, compared to S&P, it left those relative equal highs. But then you look at NASDAQ and it's went up, came down, attacked buy side, right? So it went up, came down, and then attacked buy side. So my draw is basically lower down into at least this low of the January 2nd fair value gap / SIBI, which would be, what is this? 16,737 and a quarter. And yep. So dollar, hold on, let me go back to dollar. So I'm actually watching this 15-minute order block. I was watching it inside of the 8:30 candle, and I'd like to see it be used as support, which it has so far. So that lends to the idea of that weekly draw. That lends to the idea of attacking this buy side above the London range, so the high of the 1:45 a.m. candle, and that lends to the idea of the inversion of this Tuesday, Wednesday new day opening gap. So draw the consequent encroachment, so we can actually use that as a reference point now. Would we like to see that delivered again? Well, it can, because it can come back down into that order block. So right now we have just traded above that buy side, which I think I mentioned just like a couple minutes ago. So much stuff that I just went through, so can't even remember. But we're 6 minutes away from the open. 6 minutes and 10 seconds away from the open. No, 5 minutes and 10 seconds away from the open. Now 5 minutes. So let's just watch the dollar. Well, I'm just gonna pop it up on my other screen. Here's the S&P. We've dug a little lower from when I originally started watching. So, like I said, go back to the dollar again. I'm all over the place. But if we do come back down into that order block, it is possible for just a short little retracement at the open into or not into, on S&P. So basically what I'm saying is, if this goes down into the order block, the S&P will kind of have to do the opposite, which means it will be used as a retracement or like a Judas swing basically. So above the 9:30 true day open, or not true day, but yeah, the 9:30 opening price. So once that 9:30 open is there, we have a new reference point that has just been added. Fun. And I really like this buy side above here and here too, but for sure this one. So despite the dollar going up, the S&P is also going up. So let's see what it really wants to do. I am watching this imbalance here in confluence with this buy side imbalance. That leaves a balanced price range. So balanced price range is essentially useless unless you have a draw. And my draw right now is these lows right here, and then next to this low right here. So that's just my intraday draw. So I gave you my daily and weekly draw. That I just gave you my intraday draw. So the daily and weekly will lead to the intraday draws. And so, a couple of years ago, like 2 years ago, I still remember the feeling of waiting for the 9:30 open. It had been the first time that I'd ever waken up super early to watch the markets, and I still remember the feeling of like adrenaline and nervousness, and just all the feelings you don't want when trading. It's very typical. I felt it, more than once, but it's really important to just stay calm, especially at the 9:30 open. You don't want to jump in right away. It's very typical for people to jump in, so that's why they use those Judas swings. That's the function of the Judas swing. You want to see what happens first. I'd rather sit out of a move unfolding immediately right off of the open, like when you like right from the 9:30 open, it goes one tick above the 9:30 open market price, and then just spools down to your objective or something. If you can get in those, great, but having that feeling every day, or having the urge to jump in that every single day, it's not gonna happen every single day. I mean, just go back to your charts on the 5-minute chart for all contract deliveries and see how many times does that really happen. Very few. So usually it goes both directions. And I know it sounds crazy or stupid, but it's a mindset that helps me. So let's see. So there's a 9:30 open. So we want to mark that 9:30 opening price on all indices and the dollar index too. So one thing, I'm just going to mention this, and I'm probably going to mention this a few times. Something is wrong with my HDMI cables. So when I'm live streaming and I kind of have my cursor outside of the outside of my primary screen that I'm recording on, for some reason it gives off like this really weird effect on the current candlestick that's live, so I don't really like it. When I get my PC, hopefully it'll be fixed. Until then, I guess we're stuck with that. So there's that buy side, that monthly buy side. Rejection block here. Should we get up into this high? I'm watching the NASDAQ. It's a little, it's like, I don't know what the proper word is, like a laggard. It's lagging. Basically, it's behind. It's not in like the same vicinity of that high to current market price. So I'm anticipating an SMT, meaning the high of this is breached on S&P and not on NASDAQ. So that would give you that Judas swing effect where it went up only to go down. So let's see, we had a very fast opening, but let's see. So there's that previous day high, just swept. And NASDAQ's price is still stuck behind, so I'm closely watching for an SMT or signs of a reversal. I think we're very deep in a premium right now, and it's due for some sell side attacking. Someone needs to be, or anyone who is long or has been long off of this move and potentially getting greedy, they're gonna get punished soon, in my opinion, or they're gonna pay the price of getting greedy or being greedy, if that makes sense. So I wouldn't want to see the Nasdaq trade up higher above the London highs. S&P still going higher. So now we have to ask ourselves, where is it trying to draw to? Well, to me, just deeper into this sell side imbalance. Nasdaq still not moving much higher. Definitely not as much as S&P. So I'm still keying up on that. And so watch these two up close candles as a reference point for a potential bearish order block, but it's important not to jump ahead of yourself. That doesn't mean that you would go short over there. You're watching it. That's it. So note this buy side imbalance, sell side inefficiency. I'd like to see this treated as inversion and drawn down to the 930 opening price. Anyone who went long at the 930 open, here, all throughout this, I want to see that retrace or return back into that, pull back into that, draw lower, and then we'd see from there, is this low valid, and then this one. So the dollar is trading higher after referring to the new day opening gap of Tuesday into Wednesday high. So I'm watching the London highs on dollar index. And also it can be hard to navigate when dollar and the indices are trading in tandem, meaning if it's going up and the S&P is going up, it's a little unexpected because it's going against the flow or going against the grain. But that's basically what happened here as the 930 opened. While dollar was going up, S&P also went up. So that just gives me more reason to believe that this was a stop hunt, especially because of the SMT on NASDAQ and S&P. So let's see. Watching this high. There it is. So we're still drawing up higher. So like I said, that's why it's important to wait. And this would be for the first 30 minutes of the market open, which is like an opening range protocol. Notice that there's no premium arrays to be going short on, so if you're going short here, you probably are rushing. And also there's the time element. You should be waiting for 10 a.m. Even if there is a premium array, you should still be waiting for 10 a.m. So NASDAQ does not have that same enthusiasm as S&P right now, and usually it's reversed, but right now NASDAQ is, I mean, not close to its London highs. Could it get there? Sure, but our bias is bearish, so we're looking for bearish prices. I'm not just gonna switch up because I see that the NASDAQ has some space to that London high. So that's really important. And so as a measuring point, watch this as inversion. There it is. So we want to see how we close in comparison to that fair value gap right here. I mean, to make it super simple, there's two options. Uses this and attacks the high again, or uses this and turns as inversion, meaning what should have been used to take it higher is used to take it lower. And we're above this buy side, so I like that. So this is essentially the first premium array I've pointed out on a 1 minute chart. This is a 1 minute buy side imbalance, sell side inefficiency that I would treat as a 1 minute draw on liquidity. So we're 3 minutes away from the 9:50 to 10:10 macro. So I do think that things will start to unfold here. Dollar working higher. On NASDAQ, if you take a look at the 9:30 candle, the 5 minute, let's go to that real quick. 9:30 candle right here, you can see we're actually trading inside of it. So the 9:30 market price throughout the entire delivery of this candle is currently being traded at, and then you look at the S&P, and this is the 9:30 candle, and we're above that. So S&P definitely has room to the downside. So NASDAQ references its 9:30 opening price. and Nasdaq also referenced its midnight true day open. You can see S&P is still above that, so definitely has room to the downside. And I'd like to see Nasdaq below 16,809 and 2/4, which would give me reason to believe that Nasdaq, S&P can trade to its 9:30 open. So where I got Nasdaq's draw on the 16,809, let's just say 16,809, is the New York AM session low, the current New York AM session low. So notice how I'm not using S&P's New York AM session low. I'm actually using what's relative to that. Below this low, I want to see this imbalance filled in. So note this imbalance and then this imbalance. Notice how this one is above the buy side. So just like a quick thought off my mind, I don't want to see this one traded to. Should it trade it to it, I mean, I'm allowing for that to be wrong. So my stop would be more so above the consequent encroachment of this, or even at the high. But I'm allowing for that that space to be wrong, and that's really important, that you have some room to be wrong. Otherwise it'll just, it'll be harder for you in the long run. So it can trade here, and I'd like to see a trade here. I wouldn't like to see a trade here and above this buy side. Should it do that, the idea negation would be more so at this high or at the consequent encroachment of this imbalance. So basically what I'm saying is I don't want to see consequent encroachment of this. And so that would be treated as like a breakaway gap. And the rules for a breakaway gap are it can be traded to, but we wouldn't like to see it trade to it. So you're allowing, or you're building up the allowance of being wrong. And you can be wrong and still be right. There's that low, and there's that imbalance high. One tick below it, I would consider it booked. Real quick, go to the NASDAQ, just off like the top of your eye. These are two, not super equal, but two in proximity lows. Sell side resides below that. Imagine you went long here, you have this entire run up, it returns back down here. You're probably sweating, but that just that little space gives retail the idea that it's going to or it's not going to return there, and I believe that it is going to return there, so we're attacking that idea, we're attacking that sell side. So how likely do you think that sell side is to be attacked? And then you can go to the S&P, and you see that, you know, we still have these equal lows, but look at how far it is from that. So that's why we're using the 930 open as a draw, while NASDAQ is trading to those relative equal lows. So should NASDAQ trade to the relative equal lows, I'm looking for this 930 open on S&P. So I definitely can retrace here up into this imbalance. But I would not like to see it trade any further above that. We've gotten into this imbalance high. I've seen many scenarios where it does this and then trades to the closest imbalance, or like the one that's closest in proximity, and then it just sends it lower. So let's see what happens here. If he goes above this, then it would go to here next, and like I said, we don't want to see consequent encroachment traded to, which is essentially the breaker low. So and I really hope my screen is recording here, cause that would be awkward. So NASDAQ has traded below its Tuesday into Wednesday new day opening gap, and now it's returning back up into it. So I'm looking at that and thinking of it as a premium array. So any retracement right now, I'd only like to be seen as, well, a retracement, and I don't want to see it go up into the consequent encroachment of this. And if it does, I'm happy. I can close out knowing that we basically anticipated this breaker and the inversion of this fair value gap. So plus we have CPI tomorrow, so that's like probably your number one factor as to why you should be closing out your sessions as early as possible and looking for the lowest hanging fruit, which is essentially this run here from 40, let's just say 48.04 to, let's just say 47.98. So that is more than 5 handles, and that's all we're looking for, you know. And this is not even a bread and butter day, so the hour is 10 o'clock. So we're inside the silver bullet. So I'm going to draw this out here. Boom. there. Premium. And I would draw the silver bullet time reference, like the square that I usually do, but it would just cluster the chart too much. Watch these equal lows, double bottom. There we go. There's that imbalance. And you know what? 9:30 opening price. I'll call it a day. Boom. There it is. And by the way, today's my birthday, so anyways, I'm gonna close the stream in like 30 seconds because I know that the stream, I don't know why it cuts it off early, so yeah, I guess we have 30 extra seconds to watch this, but nice. And by the way, oops, NASDAQ, like I said, equal lows, I'm attacking those. So, okay, 30 seconds from now, I'm closing the stream.